If we look back to when MicroStrategy began this journey, which was around August of 2020, and we look at the performance of all major asset classes since that time period, Bitcoin's up about 140%. The S&P index is up maybe 25%. The NASDAQ is up in the teens, actually maybe even less. Gold is like a plus 1%. Silver's been down, it's lost money, and bonds have lost even more. So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value.
Microstrategy's executive chairman, Michael Saylor, discussed the potential for widespread institutional adoption of Bitcoin with Michelle McCory from Kitco. Since MicroStrategy started investing in Bitcoin in August 2021 and became the first publicly traded company to hold the cryptocurrency on its balance sheet, Saylor has been a strong advocate for Bitcoin. MicroStrategy currently holds the largest amount of Bitcoin among public companies, with around 140,000 Bitcoin in its possession. Despite growing interest, there are challenges hindering widespread institutional adoption. Saylor identified three main obstacles: unfair accounting processes, confusion between Bitcoin and other crypto assets, and ongoing regulatory crackdowns. However, Saylor remains optimistic that these issues will be resolved, opening the doors for institutional investors. MicroStrategy has expressed support for proposed accounting standards by the Financial Accounting Standards Board, aiming to enable fair value accounting for corporate Bitcoin holdings.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value. It has achieved that kind of performance in a volatile fashion, but even on a Sharpe ratio basis, it's outperforming alternatives. And I guess the best alternative right now is really the S&P index, which requires that you take equity risk. The world wants a hard commodity money, but the second best commodity is gold, and it's just not standing up to Bitcoin at this point in time. And the weaker commodities like silver, soybeans, oil, timber, they just don't work, because when the price goes up, you can make more of it. And of course, if you can't use a commodity, you got to go to a security. And if you go to a security, you've got counterparty risk, because securities have issuers. And so Bitcoin is filling this void. It's the asset without an issuer. It is not just a commodity, but a scarcity. It's capped. And I think that's why it's outperforming all these other assets over this time period. Well, I guess we've gone from MicroStrategy being the first to there being 24 or 24. So I think going from 0 before we got into the market to 24 right now shows some promise for something which is completely new in the history of the human race. It doesn't surprise me. The reason it's challenging is a couple of factors. One is the accounting. The accounting was indefinite and intangible, and if I had to boil that down, that's toxic. If I wanted you not to buy an asset, I would make it indefinite and intangible accounting, because what that means is you always have to write it down, but you can never write it up, which means that you will never, ever, ever have an investment gain on an asset with that kind of accounting. It had that accounting because it was a new, novel, scary, not understood thing that no one used. And so the accounting industry took the most conservative view they could take, and perhaps that was reasonable in the 2014 timeframe or 2017. We're moving toward fair value accounting right now, and I think the first milestone we'll have to get over is we'll have to go to fair value accounting before a publicly traded GAAP reporting company can reasonably get enthusiastic about large sums of this asset. I think the second thing holding it back is crypto confusion. A lot of people had a hard time distinguishing between Bitcoin and FTX and FTT token and Terra and Luna token, and is that a stable coin, and all these other crypto assets. That got to peak confusion about a year ago, when all the crypto companies bought at all the Super Bowl ads.
Yeah.
And for the last 12 months, there's been this crackdown, meltdown rationalization where every single one of these wildcat crypto companies has been going bankrupt, and all of their air tokens have been crashing. And then everyone promoting the air tokens is getting sued for for pumping unregistered securities. Now, that's a very expensive, like multi-$100 billion educational lesson for the marketplace and the media. Until we actually get assured clear distance, some amount of distance from that crypto crackdown, I think that conservative CFOs will be a little bit careful there. I think that the silver lining there is Bitcoin's credibility has been enhanced in the past 12 to 24 months because all of the bankruptcies of the other crypto companies have illustrated economically why they are not assets without an issuer. If there was no issuer, there'd be no one to go bankrupt, right? So the bankruptcies have been demonstrative, and that has forced the regulators, both in the CFTC and the SEC and the like, to point out that Bitcoin is commodity, and that has required millions, if not tens of millions of people to understand the difference or learn the difference between a commodity and a security.
According to Michael Saylor, the recent FTX collapse has served as a valuable lesson for millions of investors and regulators regarding the distinction between Bitcoin and other crypto assets with issuers. This understanding is crucial for more companies to consider investing in Bitcoin. The first issue that needs to be addressed is accounting standards. In a letter to the Standards Board, Microstrategy expressed support for the proposed approach, highlighting the impracticality of current practices. Microstrategy, as the largest public company owner of Bitcoin, holds approximately 140,000 Bitcoin. The current accounting model undervalues their Bitcoin holdings, and adopting a fair value model would provide investors with a more accurate view of their financial position. Returning to Saylor's interview, he also touches upon the ongoing regulatory crackdown and its implications for Bitcoin.
Bitcoin's asset class, or its classification as a commodity, properly understood and broadly understood by the entire investment community, is kind of the second chasm we have to cross. The third chasm is the entire crypto industry right now is under pressure and crackdown from the regulators, and there's a lot of pressure on crypto exchanges, cryptocurrencies, crypto assets, securities. And until that's resolved, and you see Bitcoin trading on regulated exchanges that have been endorsed by the SEC or by the regulators, I think there are a lot of conservative investors that will just stand off and wait. The way you'll know that happened is when the SEC approves a Bitcoin spot ETF. That's kind of an indicator that they've decided that they endorse the exchanges trading the asset. And they've never liked the fact that the asset Bitcoin is cross-collateralized and cross-traded with other crypto assets. The idea that Do Kwon could issue $60 billion of Luna and then issue $20 billion of UST and then buy $4 billion of Bitcoin backed by $60 billion of an air token and then wash trade it on an unregistered exchange without surveillance. That has been a bother. That has been really offensive for regulators. So when the crypto industry gets cleaned up and when the investing public is educated and when the accounting is normalized, I think you'll see more conservative CFOs start to look at this as an asset they can allocate to in size. I think the regulators are of the opinion that they don't want billions of dollars of U.S. currency to circulate in dark pools in such a way that they evade the controls of the banking system, the KYC, the AML controls, and they don't want to be used for sanctions evasion. And for that reason, stable coins are a problem for them, and I don't think they're going to change their view. I think they've also decided that many, if not most of the crypto tokens are securities, and they're unregistered securities being manipulated by the issuer in an unethical fashion, and they don't have full disclosure, and therefore they're violating securities laws. And I think their opinion of those two things has strengthened in the past 12 months. I think the meltdown of FTX was a catalytic event that caused the regulators to decide that crypto exchanges, crypto securities, and cryptocurrencies that imitate the dollar are not really consistent with a stable world financial system, and they're going to take actions to shut that down everywhere in the world. I don't think anywhere in the world that's going to be tolerated. I think it's just a matter of time as to how long it'll take for that to be wound down. Well, Bitcoin is the one universally acknowledged digital commodity in the world, and it is backed by a Bitcoin mining network, which represents digital power. So Bitcoin itself represents the world's most secure database, and the Bitcoin network represents the world's most secure computer network. So my message to Washington would be, if you want to take advantage of the world's most secure database and a fault-tolerant military-grade communications network, then you would want to embrace Bitcoin.
Suppose these three issues are successfully resolved, and major firms like Fidelity or BlackRock, with control over trillions of dollars in assets, allocate even just 1% of their balance sheet to Bitcoin. In that scenario, many other investors are likely to follow suit. Michael Saylor believes that this will be the turning point when the world recognizes Bitcoin as the ultimate hard money, a decentralized digital currency that transcends borders and operating hours, with a limited supply. He emphasizes the appeal of Bitcoin as a scarce commodity without an issuer. It would greatly benefit from your thoughts and observations on Saylor's interview and his analysis of the factors that could attract institutions to Bitcoin. Don't forget to express your support for Bitcoin by participating in the Standards Board survey before June 6th. This could mark a significant milestone for Bitcoin and other digital assets. Please share your comments and opinions below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.